Hi everyone, Kyle Wells here of the OEP Networking Group. Joining me this morning is Michael Solomon, attorney of Solomon, Steiner and Peck. Good morning, Mike.
Yeah, how are you?
I'm doing wonderful, thank you. He's been practicing law for over 40 years and has been focused on succession planning. And this video is a continuation of our ongoing content series around succession planning. Mike, what are some of the issues that need to be discussed from a legal standpoint and a tax perspective when preparing a transferring business?
Well, people always want to know about taxes first. So right now, in 2024, the federal estate tax exemption for a married couple is over $27 million. And it'll be adjusted for inflation next year. And then if Congress does nothing, it reverts back to $7 million a person. So for most married couples, taxes aren't an issue. We don't have to worry about taxes.
That makes sense. So let's explore a scenario, and one that's very common here in Northeast Ohio. Say mom and dad own a business and there's 2 children in the business and one not. How do they approach that transition and how do they manage their succession plan to make everyone happy?
Well, one of the biggest issues I find is that people want to make it equal. They have, let's say, 3 children. They want to make sure that all their children get the same amount. But typically you can't do that in a family business situation. Most of my clients are mom and dad. Most of their net worth is tied up in the business, and you just can't let it equal to all 3, because what happens is the child not in the business has different goals. The child not in the business doesn't want money invested in the business, he wants the money to come out as soon as possible, and that may not be good for the overall business.
So are you suggesting that perhaps a company or an individual should consider transferring some of those shares to children while they're still alive?
Well, that depends on the situation. Some children at some point, as mom and dad get older and the children get older, they may want to have some ownership interest. And if you do that, you can design it with the proper documentation so that, let's say, the shares, if it's a corporation or the LLC, the membership units, you can give a lot of those units to your children and still keep control. Mom and dad can still keep control if they want. But it's an important thing. Once your children have ownership interest in the entity, it's no longer the same relationship. You have duties. The parents now have a fiduciary duty to the minority shareholders. They can't fire them willy-nilly. There's all sorts of special protections for minority shareholders or owners in an LLC. So you have to consider that carefully when you do something like that.
And how would that sort of thing implicate the involved individuals upon death if the business owner were to die and those shares were still held by the child?
Well, typically you have a shareholders agreement, or in the operating agreement says what happens. Many times when mom and dad pass away, the shares are bought back by the business or bought back by the children in the business, or the other situations, sometimes the child passes away unexpectedly, and you address that in the document. Provide how the shares are bought back, if they're bought back, or are they passed down to the grandchildren, the terms, is it an installment note, the valuation, all those issues need to be addressed. Many times, especially with the children, they might buy life insurance so that if the child passes away unexpectedly, they can buy all that stock back with the cash, and the family is protected and the business continues.
And Mike, you have me thinking of a lot of different angles that this is something to consider from. Another one is, what happens if, mom or dad want to retire?
Okay, that's a big issue too, because mom and dad have been pulling their salaries out of the business over the years. If they want to retire, but they still need income, many times we'll have mom and dad sell the business to the children. Maybe not for the entire fair market value, but they'll get some payments over time, and that helps support them. Now, there's all sorts of special income tax planning you can do with this to save estate income taxes, So they need to think about that carefully and design it. You can design it to save income tax if you do it right.
So in summary, what should some folks do if they're looking to start organizing their thoughts and putting a plan like this together?
Well, the most important thing is you sit down with your accountant, your financial advisor, your attorney, start planning this, because if you wait at the last minute, that's when bad things happen. So you need to sit down with your advisors.
Excellent. So Michael, it sounds like we need a comprehensive plan. It sounds like you need to start thinking about it now, and it sounds like you need someone with the expertise and experience as yourself and your firm does. So Mike, if someone's ready to take that first step, and I know it's a scary one, how can they get in touch with you and your team?
Well, you can give my office a call. The telephone number's on the screen, 216-765-0123. Give us a call or email me, and I'll be glad to set up an appointment with you and then see where we can go from there.
Fantastic. Thanks so much for joining us this morning.
Thank you.